The story you're about to hear is based on real-world tax situations, but may contain dramatized or fictionalized elements for educational and entertainment purposes. Having worked for the IRS for nearly 2 decades, I'll also explain what may be happening behind the scenes and what options taxpayers may have. This content is not legal, tax, or financial advice. Now, let's open the file.
Marcus finally admitted the truth. He thought that because he was self-employed, he was outside the system. He thought nobody was looking. "They aren't just looking, Marcus," Sarah whispered. "They're here." When a tax assessment becomes official, it moves from the processing division over to the collections division, and the collections process is entirely systemic. Once that final notice is sent, a 30-day countdown clock begins. The system doesn't hold a grudge. It simply follows a protocol. If no action is taken by the time the clock hits 0, the computer issues an automated directive called a levy. A levy is not a threat. It's an execution order. The system automatically sends a digital notice to any bank where you hold an account under your Social Security number. By law, the bank must immediately freeze the funds up to the amount owed. For 21 days, that money sits in limbo. You cannot touch it. Rent checks will bounce, and debit cards will be declined. If the problem isn't paused or fixed within those 3 weeks, the bank sends the money to the government. But it goes further. If you are self-employed, the system can send a levy notice directly to your regular, ongoing corporate clients. It instructs them to redirect your project fees away from your bank account and directly to the tax account instead. Marcus wanted to stay invisible. But now, his financial life is completely transparent. The home office was completely dark, save for the glow of a single desk lamp. Marcus and Sarah sat on opposite sides of the room. The silence between them was heavy, heartbreaking. The dream of the new house with the studio space had completely dissolved. Suddenly, Marcus's phone lit up on the desk. It was an email notification from his largest client, the tech startup that provided 70% of his current income. He slowly reached out and tapped the screen. The message read, "Hi, Marcus. We received an official notification from the billing department regarding an administrative hold on your payments. Per legal counsel, we have to pause all direct deposits to you until this is resolved. We hope you understand we have to suspend our upcoming design project until further notice." Marcus dropped his head into his hands. Quietly, looking out the window, Sarah asked, "What do we do now?" Marcus could only offer a muffled, broken reply, "I don't know. I don't know how to stop it." Marcus tried to disappear, only to find out that the system knew exactly where he was all along. His savings are frozen. His biggest client has paused his contract, and the life he built over 3 years of hard work feels like it's slipping away in a matter of days. But this isn't the end of Marcus's story. Because the machine that broke his world apart also has a reset button. The question is, can Marcus find a way to file his real returns, prove his true expenses, and reverse an $84,000 bill before the bank sends his life savings away forever? Or has he waited just a little too long? The dawn that followed was the longest of Marcus's life. The morning sun offered no warmth through the office window. illuminating only a desk buried under a mountain of paper. Bank accounts frozen, income halted, and a relationship hanging by a fragile thread. Desperation has a way of stripping away a person's pride. Realizing he could no longer hide from a machine that had completely surrounded his life, Marcus picked up his phone. With shaking fingers, he dialed the number listed at the top of the collection notice. The hold music was a repetitive, low-fidelity loop that felt like an physical weight pressing against his chest. Minutes turned into an hour. Every second that ticked by was a second closer to the bank, transferring his life savings into the void. Finally, the music cut out. A calm, professional voice answered the line. Marcus spoke quickly, his voice cracking with a mixture of fear and exhaustion. "Hello, my name is Marcus Vance. My bank accounts have been frozen. My clients are refusing to pay me. I received a bill for $84,000, but it's completely wrong. I didn't make that much profit. You're destroying my life based on a mistake." The voice on the other end didn't flinch, nor did it answer with anger. The customer service representative simply asked for his social security number and verification details, then let the keys clack against a keyboard for a few moments. "Mr. Vance," the representative said calmly, "the $84,000 assessment is not a mistake. It is an official substitute for return. We sent notices to your address over the last 12 months asking for your records and received no response. Because you did not file, the system calculated your liability based entirely on the gross income reported by your corporate clients. By law, that calculation stands as your official tax bill until you provide evidence to dispute it." "But I have expenses," Marcus pleaded, leaning his forehead against his desk. "I spent thousands of dollars on equipment, software, and overhead. My actual income is barely half of what that paper says." "We understand that, Mr. Vance," the representative replied, "but the computer doesn't know what you don't tell it. If you want to challenge this bill, you cannot do it with a letter or a phone conversation. There is only one language the system accepts to undo a substitute for return. You must file original, accurate tax returns for all 3 missing years." Marcus felt the room spinning. "File them now! But my accounts are frozen today. Rent is due. If my savings are gone, I can't even pay to have someone help me build those returns." "Here is what I can do," the voice said, introducing a sudden glint of hope into the dark room. "If you can provide proof that this levy is causing an immediate severe financial hardship, meaning you cannot afford basic housing, food, or utilities, and if you agree to bring yourself into compliance, I can request a temporary freeze on the collection action. We call it a collection hold. It gives you a short window of time to get your paperwork together before we proceed. But the clock is ticking." Welcome back to Behind the Scenes. Let's look at the gear shift that just occurred. The tax authority is often viewed as an unstoppable force, but internally, it operates under strict procedural rules. One of those rules dictates that collection actions can be temporarily paused if they cause what is legally defined as an immediate economic hardship. When Marcus proved that his frozen bank account meant he couldn't pay his rent or buy groceries, the automated system didn't magically forgive his debt. Instead, it hit the pause button. A temporary collection hold code is entered into his master file. This code acts like a digital shield, signaling the computer to pause further asset seizures for a specific time frame, usually 30 to 45 days. But do not misunderstand this shield. It is not an erasure. The $84,000 liability is still entirely active, and interest is still accumulating every single hour. The hold is simply a grace period. It is the system's way of saying, we will stop pulling the lever, but only if you use this time to build the returns you should have built 3 years ago. Marcus has been given a lifeline, but the knot is incredibly tight. The collection hold was granted, and 48 hours later, a partial release allowed Marcus just enough access to his account to cover immediate living necessities. The house dream was officially dead. The funds were locked in place, untouchable for a down payment. But the immediate threat of total ruin was delayed. Now came the real punishment, the archaeology of his own past. For 3 weeks, Marcus's dining room table looked like a war zone. Sarah sat across from him, not out of forgiveness, but out of a shared necessity to survive the wreckage. Together, they had to reconstruct 3 years of a life that Marcus had intentionally tried to leave unrecorded. Every coffee shop receipt, every digital invoice, every bank statement from 2023, 2024, and 2025 had to be tracked down, printed, and categorized. Marcus had to face the reality of his neglect. He discovered lost receipts for advertising, software subscriptions he had forgotten he paid for, and massive hardware upgrades. As they dug through the data, a professional accountant helped them translate the chaos into legitimate tax forms. And as the real numbers emerged, the true picture began to look vastly different from the computer's worst-case scenario. With all his legitimate business expenses factored in, Marcus's actual tax liability didn't total $84,000. It was closer to $22,000. "Look at this," Marcus said to Sarah, his voice a whisper of hope as he pointed to the accountant's final calculations. "If they accept these original returns, the bill drops by over $60,000. We can handle $22,000. We can set up a monthly payment plan. We can survive this." Sarah looked up from a stack of bank statements, her face guarded, her eyes reflecting the deep fracture in her trust. "Marcus, they haven't accepted anything yet. We are sending these into a system that we ignored for 3 years. Do you honestly think they just take your word for it now?" What Marcus is about to experience is a high-stakes process known as audit reconsideration, or SFR deficiency evaluation. When a taxpayer files an original return after the government has already created a substitute for return, the system does not automatically accept the new paperwork. If it did, anyone could simply type up fake numbers to wipe away a debt. Instead, Marcus's newly drafted returns must go through a manual review process by an actual compliance examiner. The examiner takes Marcus's new documents and compares them side by side with the digital jigsaw puzzle pieces, those 1099s sent in by his clients 3 years ago. If Marcus claims he had $40,000 in business expenses, the examiner will demand proof. Marcus must be able to back up every single line item with bank logs, receipts, and mileage records. If the examiner finds the proof sufficient, they will slowly process the new returns, gradually replacing the massive $84,000 automated bill with the lower corrected amount. But this process takes months. And here is where the system's hidden gears can grind a person to dust. Marcus's temporary collection hold is set to expire in exactly 7 days. If the hold expires before the manual examiner signs off on the new returns, the computer system will automatically default back to the original $84,000 judgment, and the bank levies will snap shut all over again.